all, thank you for joining us. And I'm a partner at iAngels, and I want to invite all the people that are joining me to this panel. So first of all, Shelly Hod Moyal, iAngels partner, and Tzvika Gross, a partner at BDO. Thank you. And Adrian Daniels, a partner from Yigal law firm. First of all, thank you. And I guess that what we wanted to accomplish in this panel is to set an overview of the regulatory and operational challenges and evolution in this crazy market, the blockchain market. A year ago or 2 years ago, the word Bitcoin had a very, I guess, was related to the darknet, and a lot of governments and like institutional investors and corporates either ignored the blockchain space or started to learn what the hell does it mean, the technology itself. And with all that's going on in the last year, I think that it's really clear that the train has left the station. I mean, it's really, I don't see anything in these markets that can stop this train, and we see more and more governments trying to hop on the train or refer to it and understand that they cannot ignore it anymore. And so I wanted to start with actually referring to the changes in the regulations. So to ask, perhaps we'll start with you, Adrian, although you're the farthest away. How do you see the new regulations impacting this market? Because there has been tons of regulations. We see governments banning ICOs and others trying to attract companies from the blockchain space. How do you see the evolution in this space? And I'll give you the mic for that.
Thanks, Lilach. I'm not sure there's actually been all that much regulation that's been added. I think there's been, I think the authorities have been kind of playing catch up recently. They've been kind of scratching their heads and trying to work out, as you say, how to catch up with this train that's already left the station. We've seen some guidelines issued in Singapore by MAS and by FINMA in Switzerland and Gibraltar and other jurisdictions. We haven't really seen anything by way of regulation really yet. We've seen in Israel, there's been an interim report by the ISA trying to understand, again, the kind of the buzzwords here are, I'm sure you've all heard, utility tokens versus security tokens, and trying to define whether what's being issued is a security, in which case it would be governed by securities laws, and if it's just a utility, in which case it could be sold to anybody, and for whatever reason the public doesn't need to be protected. If it's receiving something that gives it a service, if you like, or allows it to access a platform. So we're seeing the authorities trying to kind of make the distinction between, I suppose, if the tokens are security tokens, if they are utility tokens, security tokens, utility tokens, or a hybrid of the two, and how to deal with that. We're seeing the SEC in the US kind of saying, Jay Clayton was saying in February that, as far as we're concerned, they're all security tokens. Until we next notify you, they're all security tokens as far as we're concerned. And as a result of that, they've been issuing subpoenas in the US against companies that have been offering securities in the US. FINMA, we know, has been opening a large number of investigations into companies conducting ICOs in Switzerland. But at the end of the day, there's no real regulation. No one really knows what to do right now. No one quite knows how to handle it. I suppose the result of all of this has been that, to some degree, we're seeing, I think, fewer scam ICOs now. I think that, or harebrained ideas. We're seeing fewer of those. I think, the number of ICOs, as I understand, it's very hard to get the statistics for this, but the number of ICOs that we're seeing is still around the same. It's 50, 60 a month. It's what we saw at the end of 2017 when the market was going crazy, and it's still around that now. We're not seeing, apart from Telegram, I don't think we're seeing as many of the mega ICOs as we saw before. But again, according to the information that's out there, the amount that's been raised in the first 4 months of 2018 is at least as much, if not more, than the amount raised in all of 2017. And even if you take off Telegram, the $2 billion raised by Telegram, you've still got numbers that are very, very close. So I don't think the regulations they don't seem to be slowing anything down. I think they're making people more cautious. I suspect, again, we don't know for sure, but I suspect what we're seeing is people are raising less money through crowdfunding at ICOs, and they're raising it as private sales with accredited investors. They're trying harder to raise as much money as they can, early money as they can, from private investors who are accredited investors. Accredited investors being either institutions or high net worth individuals that the legislators don't feel need to be protected in the same way. So you can issue, if they are securities, you can issue those to as many accredited investors as you want in the US, or different definitions in different countries, but the concept remains the same. So I think we're probably seeing more by way of pre-sales right now, or private sales. And I suppose what we're seeing is companies trying, when they do go to the crowd sale piece, they've got platforms that are up and ready. They're not going public until they are ready or close to being ready. So I think that's what we're seeing. We're seeing that as well now.
Yeah, and Tzvika, do you also want to refer? I mean, Adrian also touched a point that an additional point about the difference. I guess the question we're being asked a lot is, what the hell is the difference between a utility token to a security token? But I mean, I'll be very glad to see BDO's point of view on both the regulations impact as well as this question of the tokens.
Okay, so in one word, I would start that in this market, regulations is the good news, despite the fact that usually we refer to regulations as boundaries and limitations, and we don't like to have regulations. But here, this is really the good news, because the paradigm of the blockchain market in the beginning was based on maybe two main revolutions. The first one is anonymity, where people could trade without being revealed. Their ID was not revealed. And the second one was the decentralized approach, where you did not need an intermediary to complete the transaction. So these two components together attracted all the dark sides of the darknet and brought in all the crime and the things that we don't want to have now. The regulations mainly, or almost only, deal with the identity side. And once you solve that problem and you let go from this advantage or disadvantage of not having an anonymity, you're able to actually introduce this blockchain and cryptocurrencies to the financial world. Today, we're not able to trade. This industry is not able to bank, and it's very hard to participate in the financial activity, the regular financial activity. And once we'll have regulations, will come in from the front entrance, not from the back door and from the windows where we're trying to sneak in today. So, in big words, yes, I think regulations is a good news for this industry. I mean, like Adrian said, we don't have a final regulations now. Everybody's trying. The problem is, it's a usual problem that regulators are always a few years behind the actual market. And if it's true for high tech, it's definitely true for blockchain. And they're trying to figure out what's going on and where they should put the regulations on. But yes, it's good. And I think, and that's also something that Adrian touched, there's a lot of concerns today when you go for an ICO, whether you're doing a security token, equity token, security token, or a utility token, a TGE. In general, the difference is whether you're giving the token holder a stake in your company or in your asset to be larger, or you're just giving him a right to participate to acquire any service. Now, there's few regulators that are involved in this sphere. You have the banking regulations, you have tax regulations, but the regulation that Adrian was talking about is the security regulators. So security regulators are aiming at the security tokens, the STOs, whatever, the security tokens. And once they define or they classify a token as a security token, they say you have a stake in a company or in an asset, then they drag you into their full regulations. And what's going on today, I mean, in the past few months, is that every ICO is trying, or almost most of the ICOs are trying to stay away from being classified as a security because they don't want that regulations. So we find a lot of, maybe 80% of the ICOs are trying to be classified as a utility, while the SEC mainly, I mean, all security regulators, but the SEC mainly is trying to broaden their grip and to say everything is security and to impose regulations. Now, this is like a cat and a mice race now, but what I think that at the end of the day, when we're going to have the real regulations, and the market, there's not going to be, or there's going to be less of ambiguity in this market, what's going to be is that there's going to be a shift from the utility tokens, from the utility ICOs to the security, because really the big news is going to be in the security ICOs, the asset base and the real securities. If you think about how much more efficient it could be to raise funds for a company using an ICO versus an IPO, the old-fashioned IPO, but and also to run markets like hedge funds using tokens. And this is going to be either replacing or complementary to the ISIN system, the International Security Identification Number that we have today.
Some of that also.
Yes, I know. So,
VC aspects.
so that is that's going to be the new thing. So if you're asking me about regulations, we don't have it yet, but it's going to be good news to have it. It's going to shift the market to the right places.
Okay, great. Shelly, by the way, do you want to add anything on the security versus utility? I think they covered most of it, but you see a lot of startups in this space.
Sure. First of all, I tend to agree with the regulators that most of the tokens, even if they have a utility aspect to them, they are also securities, because the way that entrepreneurs are raising capital for this, they're raising from VCs and people like me. I'm an investor, and they're basically telling me, you buy my token and it will appreciate over time. So if I'm a passive investor and buying something out of the expectation that it will appreciate in value because of some entrepreneurs that are creating a nice product, then naturally it has security features. I think that the biggest issue with utility revolves around the notion of value capture versus value creation. A lot of people today, when they're buying into a network or buying a token, it's because they're trying to kind of imagine or envision how the network will create value over time. But as an investor, you don't only care about how the network creates value. You want to make sure that you're also going to be the recipient of that value. And when you think about a utility or an access token to a network, you can imagine that if a network becomes extremely successful, then a lot of people will be using that token, which creates velocity. And as we know, velocity actually reduces network value. So I think that in order for investors to actually benefit from the appreciation of a network, that network needs to have store of value attributes. And for entrepreneurs, it's incredibly difficult to build in store of value attributes without tripping on security regulations, because the way you build store of value attributes is basically creating incentives for token holders to actually hold the tokens rather than using them. Now, this is an incredible paradox, because you're creating a utility token for people to use it in your network, but actually, in order to create value, you need people not to use it. You need people to hold it. And the way to incentivize people to use it, you either have to promise them some kind of interest or some kind of dividend or some kind of participation in revenues, or think about other creative ways in which you create value, like burning tokens or reducing the supply. And so I think it's a very interesting it's a very interesting discussion, and I agree that initially we saw a lot of entrepreneurs trying to avoid being a security token because of regulations, but eventually I think it's going to be inevitable, if not because of regulators who are going to come and say, listen, this isn't just a utility, maybe it's a utility, but it's also a security, but also because there are going to be sophisticated investors out there saying, listen, I'm not going to just buy your token out of the kind of the notion that it's just going to appreciate in value because of the hype. Because at the end of the day, sophisticated investors do understand the mechanics and these formulas, and will look for long-term value appreciation.
Yeah.
So you asked about the regulations and where things are going to go.
Yeah.
I think it's also probably worth mentioning where the regulations are going to go. For instance, in Israel right now. We saw the interim report of the Israel Securities Authority came out, and one of the alternatives that it suggested was to expand the crowdfunding alternative. Now, crowdfunding in Israel, or securities crowdfunding in Israel, basically allows now, very recently, for companies to raise up to 4 or potentially 5 million shekels in a year from investors who can invest up to 10,000 shekels. I suspect, at least in the near future, because the whole concept of the ICO, if you like, is the democratization of investment. It's the idea that people can generally invest. So when we can't get to a situation where most of the ICOs are going to kind of be sucked into the securities regulations, because that is the complete opposite of what ICOs are supposed to do. You let the people, average Joe, grandma, grandpa, invest some money. So I think what we're going to see a lot of. I think we're going to see it in Israel. It already exists to some degree, well, at least with equities in the US under what's called the Reg A+ regime there, which is allowing investors in ICOs, and it hasn't happened yet, but I suspect it will happen. You'll see a lot of platforms that will allow for ICOs to happen. Probably in the US, the threshold is $20 million or $50 million for a Reg A offering. Israel, I don't know where we're going. Our firm is very involved in discussions with the ISA, and our proposal is going to be take off what do you need a limit for? Raise as much money as you want on an ICO, just make sure you don't take more than a certain amount of money from any individual person. And I suspect that's what we're going to see a lot of. We're going to see, and we're seeing now that ICOs are not raising as much money, so it kind of makes sense as well that you do this crowdfunding, much smaller, minimal regulation over it. You can raise money within a certain regulated framework, provided that the people who invest in the fund, in your ICO, are only investing small amounts of money. And I suspect we're going to see a lot of those sorts of regimes being instituted in the near future.
Thank you. I actually want to shift to the discussion around the understanding the value in this space, and also in what ways this disrupting the classic old-fashioned ways of raising money, because in the past year or so, we've seen 2 geeks with a nice presentation raising hundreds of millions of dollars versus entrepreneurs with real product and knocking on VC's doors and trying to raise a couple of millions of dollars. So my first question is actually to you, Shelly, about how do you see this new way of raising money being disruptive to the VC sector? And then I'll be glad to hear your thoughts also on how is this being priced? How can we price these assets?
Okay, so many questions in one.
Yeah.
So first of all, your question about what we're seeing, and yes, it's hard to ignore the fact that we're seeing entrepreneurs that couldn't have raised $5 million from a VC raising $50 million from the public, and we have to ask ourselves whether, eventually something's got to give. I think the biggest innovation in ICOs and what we're seeing today is the fact that entrepreneurs can basically monetize open networks at the protocol layer. This was something that was not possible in the past. You needed to form a company, and when you're forming a company and equity, that company needs to, first of all, create a network, create value, and find ways to extract value from that network in order to justify its existence. And today, actually, an entrepreneur can come and say, I'm building an open network. Imagine like a Wikipedia that's an open network, but that it actually can be monetized. And what it does is that it creates incentives of developers and other stakeholders to take part in such a network and such a project that's open source and for the benefit of the entire network and the stakeholders within the network, and actually receiving a monetary incentive. So the idea and the ideals behind it are groundbreaking and have a lot of potential. And the fact that it's been such an incredible fundraising mechanism over the last year has also drawn and attracted many entrepreneurs that are actually trying to reposition their products as potential open networks in order to raise this capital, which is above all also non-dilutive. So I think that from a VC perspective, it's become very effective. My personal opinion is that only maybe 3 or 4% of these projects actually have justification of being open networks and open protocols, and these kind of top-notch projects are first of all revolutionary and also receiving the attention of many VCs. So we're also seeing VCs and other sophisticated investors joining this network. In terms of valuing the networks, it's still very early. I've seen different ways to value. The most popular way actually takes the quantitative value of money. Basically takes the formula of MV equals QT. MV stands for basically the market token supply times the velocity equals the price of the token times the number of transactions. So the tokens times the price equals the GDP. So some investors may try to envision potential GDP of such network and then divided by the velocity or the expected velocity to come up with a future price, very similar to how you would think about a DCF. So I've seen people do this, and Chris Bernsky actually came up with this methodology. There are people that talk about Metcalfe's law, basically taking the number of connected network participants squared, which equals the network value. This was historically based mostly on telecommunications networks. Some people try to apply it also on cryptocurrencies. And also more recently, I've seen people try to use Black-Scholes models, kind of with the notion and the understanding that, you know, it's very hard to project or think about a future network value of a market that doesn't even exist and is hard to imagine. All of these methodologies are still at very early stages, and most of the investments I see are based on, you know, investors' expectations around the team and whether that team will be able to generate excitement and hype and network effects. But this is extremely still very early, and I think it will take time until we see real valuation methodologies. I mean, the first thing that really needs to happen is for us to see successful applications and successful networks, basically precedents, which we can use to compare, and we might be a year or so away from that.
Do you want to add anything to?
I would just say valuation questions are difficult in the orthodox world, and when you come to high tech, it becomes much harder. And when you talk about ICO, I think frankly, I would say I don't know even how to start. When you try to evaluate an orthodox business and you try to look at the DCF to evaluate the goodwill or the know-how, and then you move into a regular high-tech company and you try to apply the multipliers and they don't have any profit, so you try to apply the multipliers for the income, for the revenues. They don't have any revenues as well, so you try to use a Monte Carlo kind of simulations and whatever you come up, and then you come to the ICO. And the problem with the ICO is it's not only that you're selling a dream, you're selling, or you're trying to sell a dream, you're trying to sell a dream within a dream, because really what you're doing is that you're introducing the world for a new concept. I'm telling my fellows, my colleagues, 500 years ago, when Columbus discovered America, I'm sure those pilgrims who moved from West Europe to America, and they were like telling their friends at home, they're saying, we're moving to America, and they said, we're going to grow potatoes or cotton there. Just make a DCF on how much potatoes you're going to grow. Is it worth it for you to travel the Mayflower? So it's not that, because when they move to the new continent, there's a new regime, a new hierarchy, a new kind of, it's a new world. And really, unlike 500 years ago when Christopher Columbus really only revealed or discovered something that was there already, the blockchain is a man-created new world, because it's based on mathematical equations and cryptographic equations. And really, we are about to create, and that's the hype that's coming with this market. We're creating a new world of opportunities and smart contracts and everything that's really going to change, reverberate in all the businesses that we're doing. And this is the real dream that we're selling. It's not only an unknown cash flow that we have to calculate. So if the Orthodox world is hard to appreciate, I must say humbly that I have no way to tell you. I know the formulas, but how to quantify this dream within a dream. So this is the situation now.
Yeah, I totally agree with all of you, and I see that we all see like a shift in value, because in the classic VC, modeling or financial modeling or in pricing, the value is very clear. You expect a dividend, you expect distribution from exits, and here there is a shift in the value creation. Where is it created? It's apparent. Very apparent that the liquidity aspect provides an additional layer in this pricing process, and I hope that shortly we'll gain enough experience to start having more profound models that we can count on. Yes, I actually have a last. I wanted to have some time also to open up for questions, but perhaps I'll set my last question to all of you, which is a question that I hear from all the time. Okay, so we've all noticed the big hype in the past year, and then in the past few weeks, we've seen this market drop. Dramatically drop, and everyone is asking, what is the reason for that? That's my first part of the question. And the second is, where do you see this going? Or in a very small, quick question is, what would you see or guess the price of Bitcoin will be at the end of 2018? Give me a number. First question.
Okay, first of all, last couple of weeks, market actually went up by about 60-70%. But I think it's important to look at the longer scheme of things. Since November, market went up 6x, and then it went down by about 60-70%, and now it's back up again. But we're still, if we look at November, market cap was 150 billion. And today we're at 430 billion. We're still appreciating at an incredible pace. So why the correction happened? It's hard to say. I would think it was a reasonable correction. There were other reasons. Because this market is still very much built and reliant on expectations around the future rather than actual value that's being added to our lives because of the blockchain, the participants are very sensitive, and market sentiment is very sensitive, and any kind of news around regulations or market movements. For example, the trustee of Mt. Gox has liquidated hundreds of millions of dollars of Bitcoin, and that obviously had an effect in this market and a lot of selling pressure on Bitcoin and other reasons. But I think, when you ask about the future and what we think about the prices in the future, I mean, I personally, I don't like to kind of try to predict the short term, but I think the overall trend is very positive and very optimistic. We're seeing regulation, taking this seriously. We're seeing corporations coming in. We saw M&A recently with Coinbase buying Earned. We're seeing very serious investors participating, like Soros and global banks like Goldman and Morgan Stanley, working on creating trading desks. I think in terms of the market, the consumers and the sentiments, we're definitely seeing the change. With everything that happened with Facebook, people want more transparency, they want more value. The technology of the blockchain is improving slowly but surely. And even the state of the dApps, I mean, there's still not a lot of dApps, but we're seeing several, at least a few dozens versus what we saw a couple of months ago, which was almost nothing. And so I think that certainly in the long term, I'm very optimistic.
Well, asking an accountant to give a prophecy. Well, we had a disclaimer even for today's date. But
lawyers are worse, Nothing herein is an investment
Yes.
Yeah.
Well, the price of the blockchain market today is driven mainly by FOMO and FUD, the fear of missing out, where everybody is like a herd joining in, and when there's a little bit of fear of doubt and uncertainty, the market drops. So it's not an intrinsic value. But I think that instead of trying to give a prophecy about the price at the end of the year, I think it's more important to focus on what are the factors that will mainly influence that price. And I think, as you said, the regulations are a key factor in, because once you'll have good regulations, that will increase the trust that will enable many other people to access that market. When people access the market, there is a greater demand, there's a greater liquidity. Today, as you all know, even the markup for a regular person to trade Bitcoin or Ether, the markup is insane. It's 15%. It's not normal. Once you have an easier way to access more regulated market, I'm sure that it will stabilize the market and increase the value. We have to understand that, as I said before, the smart contracts are going to have an effect in all the markets, and that will definitely support many other fields besides the open networks and the blockchain, but it will definitely have an effect on the price. It will stabilize the price because cryptographic currencies are going to be the fuel driving the smart contracts. And then we have other aspects of technology. I mean, besides the fact that Bitcoin has competition now. It used to be the main currency that, I mean, everybody knew just Bitcoin. Now it has major competition, and for good reasons, because Bitcoin has its own shortfalls. It's difficult to do trades there, the 10-minute block closing and everything else. But we have to think about other factors that also influence the value. I mean, we know that today, significant amount of the world's resources in energy is directed for mining. And I mean, they say that it's equal to the amount of resources of energy that's being used by Ireland or something. So this is a crazy amount of resources, and it came to a point where the value, the price of Bitcoin dropped a bit, and it was not profitable anymore. It wasn't lucrative to actually mine the Bitcoin. Now, what we are seeing now is new technologies. The Bitcoin and the Ether today is using on something that's called proof of work, which consumes all these resources, and we're shifting away from that to proof of stake. And there is a new study about proof of activity that may be introduced soon. But these new technologies, by definition, even though they're just technology, they're going to have a trickle-down effect on the resources that are going to be used for the blockchain, and inevitably they're also going to affect the value and the stability of the value of the coins. And again, there's other complementary technologies that we need today. Even if we think about the most basic thing like a multi-sig wallet, the multi-sig wallets today are not good enough. And there are a lot of innovations that are trying to solve this problem, but this is also something that blocks the advancement of the use of that currency. So once we solve these problems, and there's a lot of initiations about that, this is also going to impact the price and the value and the stability of the value of those coins.
So I didn't hear a number so far. Adrian, will I hear it from you?
I mean, Tzvika just stole all my jokes about lawyers making predictions, so we'll just take that as read. Yeah, you're not going to hear a price from me. I completely agree with everything that Tzvika just said. I think that it's absolutely right. You have to look at what are the causes, the underlying changes in the value, the general underlying causes. What I would just say is I think it's very dangerous to make any kind of predictions based on valuations of Bitcoin, for instance, because from what I'm not a financial expert, but what I do understand is that 40% or something of Bitcoin is held by about 1,000 investors worldwide. So big changes in Bitcoin might have the reasons for that may be the reasons for that may simply be actions taken by very few people for their own personal reasons, for their own institutional reasons. So I don't think you can necessarily make any major predictions based on that. I would also say that generally speaking, things happening in Japan, Mt. Gox, the restrictions in Japan, the restrictions in China, the general fear of regulation, all of that has has resulted in the correction. I suspect, as Tzvika says, as regulation starts to kick in, as people understand what's going on, we will see that the market will start to become more active again. Having said all of that, as I said earlier on, the ICO market, people might be raising smaller amounts of money right now, but the number of ICOs and the total value of ICOs hasn't changed at all. Even during the downturn, it's still vast amounts of money. The same amounts of money in the first 3 months of 2018 are more or less equal to the amount of money raised throughout all of 2017. So, so despite the correction, I think there's still an awful lot of energy and an awful lot of excitement about the market.
So thank you very much, and I want to see if anyone here wants to use this very impressive panel of experts in various sectors. Yeah, go ahead.
Okay, so it's pretty clear that...
Do you want to address the question to a specific participant? Okay.
So it's pretty clear that if one wants to do an ICO, it's going to get hard time to define whether it's security or token. That's utility. And there is a subset of token generation which is not being discussed from regulators and others. In this instance, I'm referring to selling digital assets, like digital kitties, crypto kitties, which on one hand allows the entrepreneurs to raise funds and the buyers to sell. And this is essentially a marketplace. It's like a token, but instead of my coin and your coin having the same value, each of this digital asset has its very different value. So we'd like to know what you think about this, if it's going ever to be considered as an ICO or a risk for investing.
I'll be honest, it's not something that I'm familiar with. Having said that, the way the regulators generally look at things, as I said, that they've issued guidelines. For instance, MAS in Singapore, they issued about 2 pages of guidelines, then about 4 pages of examples of what they would probably think of any particular situation, whether it's utility, whether it's security, whether it's a hybrid, whether it's something else. So at the end of the day, what it really comes down to is a sort of sniff test. Does it look and feel like a security, or does it look and feel like an asset? And if they like a utility or a security. Now, at the end of the day, it might be a utility that has certain security-like components, and there will be different jurisdictions that will deal with that in different ways. So I think we shouldn't get too stuck on whether X a sort of generic type is going to be an asset, or a security, or a generic type of token is going to be a security. We're just going to have to sit and say, we'll look at each type as it is, and whether or not, I mean, there's a famous, Howey test in the US, whether or not ultimately there's an expectation for profit based on the efforts of others. And if it kind of comes down, and if it falls into those sorts of, again, every jurisdiction has its own tests, but if it falls, into the definitions given, then it will be deemed as a security, and if it doesn't, it will be deemed as a utility, which is great for the company doing the issuance.
Thank you. Any other questions? Yeah, go ahead.
Hello, everyone.
Perhaps stand up just so we can see.
So hi, I'm Leonard. Earlier, Shelly mentioned that the token velocity is a major consideration for investing into ICOs and looking at the valuation of the companies. And there are techniques like you brought up about mint and burn, where you take some of the tokens off the market, you bring some more tokens later on, and you generally try to encourage token holders to hold on to the tokens longer, and thus reduce velocity. My question is, how do you think regulators are looking at this staking mechanisms, which are meant to interfere with the token's free trade value or natural trade value? Because they are very relevant for exchanges and marketplaces. However, I have some concerns that they might be frowned upon.
I'm not a lawyer, but if I was, I would consider it as a security, because if you're burning a token or if you're taking tokens out of circulation, it's basically like a buyback, which is basically like a dividend. So I don't know if anybody has other thoughts.
Any additional question? One last question? Yeah, go ahead.
I read Shelly's articles some time ago, and I was convinced, so I invested in the blockchain fund.
Oh.
So now I have, as a shareholder of a blockchain fund, specific questions. Number one, Shelly, you expected sometime in the future, and I thought it was a reasonable expectation, that the Chinese regulator will finally get its act together and will definitely favor Chinese companies in that particular field. The other question is related to, is the blockchain fund intend to invest in any of the technologies that will reduce the energy consumption of Bitcoins and
Her legal advisor is here, and then prohibits to like.
So first of all, I don't necessarily recall talking about the Chinese government endorsing.
I can send it to you.
In general, I'm not sure exactly what sentence you're referring to, but in general, I think Asia is a very interesting market to look at from a tech perspective, not only in the blockchain area, but in general. I think China is a growing empire, and it's interesting to look at projects there across sectors, also autonomous vehicles and software, and so I may have referred to our interest in projects based in Asia, also because of a lot of regulation around the U.S. and the West. So that's around China. What was the other question? Energy. Oh, okay. So actually, one of the things that our fund is very much focused on is looking at different types of blockchain protocols, and so we have been involved and we have participated in several blockchains which adopt some sort of proof of stake mechanism consensus. We look at other consensus. For example, we recently invested in a protocol that has come up with an algorithm around proof of time and space, which is also energy efficient. So the answer is yes. We're looking at many different algorithms and many different technologies. And I think that at the end of the day, we're going to see different blockchain protocols. There's not going to be one blockchain wins it all. And the reason is very simple. There's a tension within these consensus. There is a tension between decentralization, security, and scalability and performance. And basically what this means is the more you kind of increase the ability to be scalable, you're actually reducing the security properties. And the more you're trying to increase decentralization, again, you're going to reduce in that sense sometimes the performance and the scalability. So what we're going to see over the next couple of years as applications and businesses are going to want to leverage the blockchain technologies, they're probably going to choose the blockchain that is most appropriate for their specific tech requirements. For example, a consumer application that needs to process many transactions per second is probably going to prefer to use a proof of stake model or potentially a model that is less decentralized in order to increase performance. But certain financial applications, for example, betting applications or prediction applications, are actually going to prefer blockchains that increase decentralization and increase the security aspect. So from our perspective as investors, we're very interested in looking at different blockchain solutions that cater to different use cases and different technological requirements.
Okay, thank you, and thank also Tzvika and Adrian for joining us, and I also want to thank Yigal, Arnon, and BDO that hosted us here, and I hope to see all of you in our next blockchain breakfast. Thanks.